Well, let's turn to the advisory. Over the past 5 years, advisor numbers have fallen significantly due to regulatory reform. Are we now seeing the industry stabilise, and what does the new shape of advice look like? Andrew Whelan is the Chief Executive of Dash Technology Group and joins us now. Andrew, welcome back.
Thank you. Nice to see you again.
So, in fact, I think it'd be fair to say the industry was decimated, wasn't it? Really?
Yeah.
So many lost.
Lost about half.
Yeah.
It does look like it's stabilised. So our friends over at Advisor Ratings, the Investment Trends, have just released some more research, which suggests that we've seen the floor in terms of advisors leaving, and so we're starting to see the numbers in the industry creep back up. But since the industry's gone, it's gone through an evolution, so it's far more sophisticated and professional. It's far harder to claw those numbers back now because of the rigour around educational standards and even a professional year now. It's just going to take a lot longer to claw those numbers back, so it's going to have to look a little bit different.
So is there still a significant shortfall in
Massive.
demand for advice?
Yeah, massive shortfall in the supply.
In supply
Yeah.
To service that demand, because particularly with more and more Australians investing.
Yeah, 100%. So it's something like less than 10% of Australians are seeing it. It's a massive shortfall in terms of the ability to service the would-be advice clients. So what we are seeing is the advice or the advisors that are still in the market are making more money. They're edging further right to a more of a private client relationship. So they're serving the wealthier clients. They're serving them more profitably. But the ones that are staying in that mass affluent retail space are looking to embrace technology and AI we've spoken about before more than ever, so that they can soak up that demand and be more efficient.
Does that mean perhaps others requiring advice, particularly just getting into it, are being left behind at the moment? They're not being serviced.
Yeah, there are. There is a latent demand amongst clients that have lower balances that advisors just can't justify the fees that they need to charge to remain profitable. So that is a problem, in that you don't want, as a nation, you don't want the advice industry to be just the plaything of the wealthy to stay wealthy. You need to be able to serve that mass affluent mum and dad cohort. But the regulators haven't made that easier, but we might well be on the brink of some innovative solutions that can bring it back in a hybrid sort of human and technological way to soak up that demand.
Can you extrapolate on that? I mean, when you talk about innovations, what are you talking about?
Well, the AI one has been massive. So we were presenting 3 or 4 years ago about some of the first movers in AI, advisors being the first movers in AI, utilising it. It seemed outrageous then. Now we're seeing something like 60 to 70% of advice practices have embraced AI because most of the regulations is around that has stopped the advisors serving as many clients as they would like, is around document generation, file noting, things that they would often describe as busy work that are serving the regulator but not necessarily serving the client, and that is a really perfect place for AI to start building back into some capacity into the advice businesses.
So has that traditional advice model then moved on? You talk about those innovations. It's become perhaps more nuanced, particularly as, I guess, many requiring advice in regards to other investment vehicles, be it in private equity, those alternative investments.
Yeah, well, as we mentioned, the advisors, the traditional advisors that have remained and that have gone down that sophistication and professionalism path have naturally been drawn towards the wealthier cohort of the clients. And those clients, if you're going to compete in that private client space, you need to be able to distinguish yourself and differentiate yourself from the retail clients, but also those wealthier clients demand they demand a different sort of asset and a different sort of profile, particularly for the more speculative components of their portfolio. So as a result, advisors are being asked to move away from your ASX and your typical major listed assets. Managed funds have been in massive outflow across the globe. but in the unlisted PE offshore assets, we have seen a lot of the platforms facilitate that because of the demand that's coming from advisors, Dash being one of them, that needs to now report on, name your currency and name your asset type alongside your traditional cash and fixed interest and Aussie assets.
Andrew, bring out your Dash crystal ball then. What does the industry look like in 5 to 10 years, given the structural shifts that you're already seeing underway now?
Yeah, so I think from a human perspective, I would see modest growth, because it's going to be hard to get the pathways down. The pathways have been much harder for advisors, advisor numbers to be added. So what I think we'll see is something a lot closer to what America has been good at implementing, which is this digital first hybrid advice relationship where clients can self-help with the use of AI and really good technology and really good algorithms, but a human can overlay their sense of security to the client around any recommendations that have been generated by the technology. So America has moved, even before the pandemic, they were showing signs of this. We have been a bit slower because of our regulatory environment, but it's difficult to predict that there will be a vast number of humans coming in. So technology and AI is probably going to be the sharp end of the spear there in terms of soaking up that demand that's sitting there latently.